Hello and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm happy to be hosting tonight's presentation, which is titled Graphs Don't Lie. Back on December 3rd of 2004, Dr. DiLiddo wrote an essay called VectorVest Simple, and the idea was simply to look at graphs of high-quality stocks and favor those with distinctly rising price and earnings per share patterns, and to avoid those with excessive volatility and violent drawdowns. Dr. D wrote in that essay that it doesn't take long to look at 20 graphs, and it's really easy to do, and that's why he calls it VectorVest Simple. So here's a visual of what Dr. D was talking about. This is one of those graph patterns that we would favor with those rising price and EPS patterns. Here's a picture of one we might want to avoid in our portfolio, with the big drawdowns and the steady downtrend in the stock. And finally, those with excessive volatility are also stocks we would want to avoid. So what I would like to do is revisit that idea and walk through the steps of taking high-quality stocks, whether they are top VST stocks or from a search that finds safe, predictable stocks, like say ruler stocks or LongTerm Winners, RS Descending, and that's the search we're currently using in our worry-free investing portfolio. And then I'm going to take it a step further, and we're going to look at a graph using the VectorVest Simple layout to help us determine when to get out of a position, or at the very least become defensive so that we can mitigate any potential losses. So let's get started. I'll begin here from the home page, and I'm going to start by going to the main toolbar, clicking on the Unisearch tab, and it brings us into our search directory, and I'm going to go ahead into the retirement folder, and we're going to go use that LongTerm Winners RS Descending as our example for tonight's illustration. It tells us in the comments box that the LongTerm Winners RS Descending finds stocks with consistent and predictable earnings growth. The sort brings the stocks with the strongest performance right to the top of the list. And we'll see some very recognizable names at the top of this list as we get going. And I'm going to go back to the local toolbar here, and we're going to go in and we're going to graph the top 20 stocks. And again, our goal here is to be able to cherry pick through looking for those very smooth lower left to upper right price patterns. And to do that, I'm going to click the Graph Layouts menu, and when I'm in the stock graph, I can find right at the top of the list the VectorVest Simple layout. Now the VectorVest Simple layout has some very basic pieces of information on it. Number one, it's got the price of the stock represented in candlesticks. The blue line, or the turquoise colored line here, is for the VectorVest stop price. Remember, the VectorVest stop price is a 13-week moving average that's adjusted for fundamentals. And we can clearly see when that stock has fallen below that 13-week moving average, at which point it will become a sell recommended stock. Which leads me down to the lower left menu here, and in this menu we have a recommendation tab that I can click, and right at the top of the graph it's going to put that recommendation history clearly at the top so we can track that rating very clearly and very simply. Down below we have the relative timing indicator. Relative timing is an indication of the short-term trend of a stock, and so very important as we manage our portfolios or find the right time to cherry pick through and find the very best stocks for our portfolio. And then finally down on the bottom we have the earnings per share. Remember, in VectorVest it is a forecasted outlook for earnings per share, and we're able to track that on the graph. And again, just like the price of the stock, we are looking for that nice lower left to upper right steady movement of the earnings per share forecast. So these are the important pieces of information we need, again, when we're looking to populate our portfolio and cherry pick through and find just the right stocks for our investment style. And the stock that came to the list for our long-term winners is Nike. And over here to the right on the scroll bar just below that circle, I now have 20 stocks that I can very simply scroll through to analyze these graphs. Again, we don't want to take too much time and overanalyze what we're looking at here, but I want to be sure that I have that lower left to upper right movement on both earnings per share and on the price pattern. And as Dr. D has said often, a one-year graph of a stock is like its DNA. What you see is what you get. So we'll take a look at Nike. We'll start here, and everyone's familiar with Nike and the strong earnings per share, very often the highest ranked relative safety stock in the VectorVest database. And so we're pretty comfortable with that movement. It did have some choppy times late December of last year into January. Not many stocks didn't have that bit of a drawdown. Still a quality company, and if I go over again, I can scroll down over here in the scroll bar right below that circle there, and I can continue to scroll through these until I see a stock like PSA, Public Storage. Now this is the kind of graph that we're talking about when we're looking for long-term winners, the type of graph pattern that we want to have in our portfolio so we feel comfortable with the history of that stock. So earnings per share moving up very nicely. Relative timing, middle of 2015, below 1 but staying above its stop price or its 13-week moving average. Holding on from hold to buy, and through the last year never becoming a sell recommendation. While it did threaten that stop line here, the blue line again is the 13-week moving average, it never actually closed below that line and never became a sell over the last year. And we can continue to scroll through. Hormel Foods, another very fine looking graph. Earnings per share did have a little dip back here, but the stock actually gapped up just before that. Probably an earnings announcement, but again, a stock whose RT for the better part of the last year has stayed above 1 and risen nicely. So these are the type of stocks we want to see. As we cherry pick through, not every stock at the top of every list is going to do that. Now Starbucks, a great company, but since late October has really moved sideways and kind of slightly has trended down. Still hasn't closed below that stop line, so it hasn't become a sell recommendation. But earnings per share stay strong. And again, a quality company that we certainly can consider for our portfolio. But again, the beauty and the simplicity of this is to scroll through. Jack Henry, a software company, also looking very strong on the VectorVest Simple graph. Novo Nordisk, not so much, right? It's got that disjointed volatility to it. That graph pattern is very troublesome for a longer-term minded type of investment, and that's just not the kind of graph pattern that we'd feel more comfortable with in our portfolio. And so you get the idea. I can continue to scroll here. We scroll through 20 stocks. We find those very best price patterns. Accenture has a nice one, EPS, as well as the price moving. And then we have some that are a bit choppier as we go through. So again, favor those stocks with the distinctly rising price and earnings per share pattern. Always check market timing. Be sure that our market bias is to the upside before purchasing these stocks. And we greatly enhance our odds of being on the right side of the market and making money when we follow this system of VectorVest Simple. Sometimes, however, the real world gets in the way. And we know that no stock goes straight up forever, and that sometimes even the best quality stocks can run into some hard times and some roadblocks. And so the stock I'm going to use as an example, it's been in the headlines for the last few weeks or even longer, is a company called Valeant Pharmaceutical. So I'm going to use this stock as an example of how to use the VectorVest graphs and specifically VectorVest Simple to help us recognize when these good quality stocks run into some trouble and some of the things we can do to become defensive in our portfolios and again mitigate any potentially major losses. And so let's begin with Valeant, and the first thing I'm going to do is I'm going to take this out. I'm just going to extend our graph out here a little bit to give us a better picture. I'm going to zoom in right to that recent high, which actually occurred back in August of 2015, and take a look. And if we were looking at Valeant Pharmaceutical for our VectorVest Simple, it looks great, right? We have that lower left to upper right movement. We've got earnings doing what we need it to do. We've got relative timing staying above 1, which is all positive things, the type of stock, again, that VectorVest Simple would find for us. But if I use this right-facing arrow down here to kind of go back in time, rewind the clock, and see what actually began to happen to Valeant in the late summer of 2015, and we see some things starting to go wrong with the stock. And so we'll walk through some of the things we could have recognized and perhaps taken action again to mitigate any possible losses if we happen to own Valeant Pharmaceuticals last August. So as I take the stock forward, the first thing that jumps out is that the relative timing indicator back on 8/21 went from above 1 to below 1, indicating that Valeant was now currently in a downtrend. And that piece of information in and of itself may not be enough for you to take any major actions, but at least it alerts you to the fact that Valeant's overall trend is now down, and that it's something that you've got to take into account because this is a stock that currently resides in your portfolio for the sake of our example. Now, earnings per share still has a nice steady movement, but remember, earnings per share is a forecasted outlook, and sometimes on the graph will be a little bit slower to react to any negative information that might be on the horizon. And so we're going to continue to scroll forward and see where these points in time where Valeant is concerned, where we could have taken these defensive actions. And so a couple of things I can do, and I'll recap later some of the things we can do to take defensive actions, but I could have sold some covered calls against it if I own the stock, or perhaps bought a protective put to protect myself from what, as it turns out, was a severe downturn in the stock. So with the stock hovering right around its stop line, the stock remains with our recommendation line up top. We see that the stock went from a buy to a hold because that price is hovering right around the stop price. And as we continue through, the RT stayed below 1, and then the stock finally closed below that stop price back on September the 22nd of 2015. So the stock has now become a sell-rated stock in our program with the relative timing indicator down below 1. Now, one of the other features Dr. D likes to put on our graphs is I can add a simple moving average to our graph, and we like to put the 40-day moving average and add that on. So all I did was right-click in the price column, add it from the menu. I go ahead and add it to the actual graph, and we can see as far back as August the 20th, we saw the stock fall below the 40-day moving average. And that was right around the same time that the relative timing indicator. So there's two important pieces of information. Again, maybe not enough to suddenly sell the stock, but some covered calls or protective puts may have been in order. As it continued, RT stays below 1 as the stock continues to move sideways. We get the sell recommendation now on the 22nd of September. As the stock continues to fall, the other step we have to take is to go right up top again in the local toolbar here. We have a news tab. And if I go ahead and click on news, it's going to take me into Yahoo Finance. And it's here where I am able to track the current headlines, make sure there's nothing going on in those headlines that's going to have me act a little bit quicker. And so you're able to go ahead and check those news stories as they come up. Now down near the bottom of the current headlines, you have the ability to go back in time and check headlines from earlier dates. I'm going to close that for now and head back into the slides just to show a snapshot that I took to go back in time, where I pulled some headlines from late September for Valeant, and some of them are highlighted in red here. And this again on top of the stock moving down below a 40-day moving average, coupled with the fact that the RT has fallen below 1 and that the stock has become a sell-rated stock. We've got some headlines here that are also going to push me towards taking some type of action if I still own Valeant in my portfolio. So Valeant CEO writes to employees as shares tumble. Even in Canada, the TSX slumps as resources weigh. Valeant tumbles. Valeant pharmaceutical stock tanks as congressional Democrats seek subpoena. And then Citron, a shorting hedge fund, says the real problem with drug pricing in America is forged in a single word, and that's Valeant. So these are some troubling headlines that we see for Valeant. And so I have all of that information in hand in the week of 9/22. Those headlines were actually from 9/28, causing that stock to take even a bigger hit. And as I fast forward and unzoom from where we're in, we can see what's happened to Valeant ever since. And so by using the VectorVest Simple layout and focusing on some very basic pieces of information, but very powerful pieces of information, we certainly would have been able to avoid this type of drawdown and this type of loss in our portfolio. So from here I want to go back into the slides and just recap a checklist that we can all use to help protect our portfolio. So the three things to look for when we're looking at the VectorVest Simple graph. If the stock should fall below the 40-day moving average, that's a piece of information we don't want to ignore. When the RT falls down below 1, it tells us that the overall trend of the stock is currently down. Again, a piece of information we do not want to ignore. And finally, when the stock becomes a sell rating, it means that you own a stock that has fallen below an adjusted 13-week moving average, and that you need to take the time to reevaluate why you own that stock in the first place. So those are the things we're going to look for on the VectorVest Simple graph. And what can we do when we see them? Well, a couple of steps that you can take. Number one is to tighten your stop criteria. If you start to feel nervous, if the market is feeling overbought or there is some choppiness in the market, you can certainly tighten your stop criteria. You can sell covered calls, like we talked about in the worry-free investing techniques that we had shown in a special presentation back from February 5th of this year, to help generate income and mitigate some losses by lowering your cost basis by selling those covered calls. You could buy protective puts, which the week after we did a special presentation on using the collar and buying protective puts for your portfolio. That was on February the 12th of this year. Of course, you can simply close the position if you're not feeling comfortable with the movement of those indicators we showed on the VectorVest Simple graph. So use the VectorVest Simple layout so that you can find the right stocks to buy in a rising market, and then to manage them once you own them. And we use that information because history has taught us that graphs don't lie.